Today, I want to respond to a question from viewer Neolithic Transit Revolution 427, which is quite a handle, by the way. Here's his comment. If it is Energi Media's stance that oil consumption globally will fall to 58 million barrels per day by 2050, where is the disconnect with Alberta aiming to provide 8 million? That doesn't appear to be unachievable at all. It's a seventh of global demand. And I assume we're talking about a seventh of 58 million barrels per day. Well, here we go. The only possible source of 4 million more barrels per day of oil supply is the oil sands. But the oil sands produces ultra-heavy sour crude, for which the current global market is only 10 million barrels per day. Refineries require special equipment to process it. Most refineries configured to run light sweet crude, like West Texas shale oil, can't switch to heavy without billions of dollars in upgrades. Of that 10 million barrels per day of heavy crude consumption, 5.5 million barrels per day of refining capacity is in the United States. Alberta already supplies about 60% of the required feedstock, leaving roughly 2 million barrels per day for Alberta producers to take from mainly Latin American countries like Mexico, Brazil, and Venezuela. Thanks to Donald Trump's tariff war, Canada has decided to stop deeper integration, like taking more heavy crude market share with the U.S. economy. And Alberta oil companies have complained for decades about depending too much on just one customer. The prospects for more heavy crude exports south of the border appear slim, at least from today's vantage point. The other big heavy crude market is China and India. The problem here is that Alberta heavy crude is a marginal barrel. Competitors like Saudi Arabia and Iraq have lower cost break-evens. The Saudis, for example, can get a barrel to the surface for as little as $7, which is much less than the Alberta oil sands. A combination of high tolls on the Trans Mountain Expansion Pipeline and high marine shipping costs means Alberta crude will find some buyers, but not nearly enough to make much difference. Speaking of competitors, Neolithic Transit Revolution 427's question assumes that other heavy crude suppliers will simply drop out of the market as demand declines. Well, that's unlikely. The far more likely scenario is that prices will fall and we'll see who can compete in which markets. To sum up, Alberta heavy crude has competitive advantages and disadvantages. If oil consumption falls as modeled in the IEA's announced policy scenario, the APS scenario, I would expect that it'll hang on to some of its existing markets while losing others. That might mean production of, say, 2 million barrels per day, maybe about 60% of current production. But the idea of somehow doubling production is a pipe dream. Sorry, Neolithic Transit Revolution 427. I wish I had better news.